If you run a self-managed super fund, here's a number that should stop you cold. The ATO can fine you, personally, $19,800 for a single breach, and your fund is legally banned from paying it back. Most trustees think a slip-up is just a fund expense. It isn't. The ATO collected about $3.4 million in administrative penalties from SMSF trustees in just 1 year, according to practitioner reporting on ATO enforcement. These aren't rare disasters. They're ordinary trustees who miss something. Today I'll show you 3 moves. Check your compliance status, verify your breach exposure, and lodge any overdue returns. Here's the central figure, $19,800. That's the maximum ATO administrative penalty per breach, 60 penalty units at $330 each, applying from the 7th of November 2024. BT Professional, Super Guide. And here's the part nobody tells you, that fine lands on you personally, not on the fund's balance. So there are 3 moves to protect yourself: check your compliance status, verify your structure and exposure, and lodge any overdue returns. Each one takes under 20 minutes, and all of them are free. Let's start with the first money leak: personal administrative penalties. When an SMSF breaches super law, the ATO can fine the trustee directly, and the fund generally cannot pay or reimburse that penalty. ATO, BT Professional. That's the trap. People assume the fund covers everything, the way it covers fees and insurance, but the law says this one is yours. How big is it? For the most serious common breaches, illegal lending, borrowing, or in-house asset failures, the penalty is 60 penalty units, which is $19,800 at the current $330 rate. BT Professional. Before the 7th of November 2024, that same breach cost $18,780. Less serious failures still land at $1,650, $3,300, or $6,600. BT Professional. Now the second layer, the failure to lodge penalty on overdue SMSF annual returns. This compounds the damage by adding a fund-level fine on top of any trustee penalty, BDO Prime Financial. The ATO applies 1 penalty unit for every 28 days late, up to 5 units. So a single overdue return can cost the fund up to $1,650 at the current rate. And here's why leaving it matters. Because that penalty repeats per overdue return. A fund that stays late year after year stacks thousands of dollars in avoidable costs before the ATO even moves to harsher enforcement. BDO Prime Financial. Lodge promptly and no FTL penalties accrue at all. The choice is simple, but the cost of ignoring it isn't. Here's the belief that gets trustees into trouble. The myth that SMSF penalties are just fund expenses the super can absorb. The fact, straight from the ATO, is that administrative penalties are generally personally payable by trustees and cannot be paid or reimbursed by the SMSF ATO BT Professional. Treat compliance as a personal liability because that's exactly what it is. So put both costs side by side. One serious trustee breach is $19,800 BT Professional, and one maxed out late return is $1,650 BDO. Combined, that's $21,450 in a single breach year, before any interest or tax consequences, authors estimate from ATO settings. Let me make this real. Meet Mark. He's 52. An electrician earning $110,000 a year. He runs a 2-member SMSF with a corporate trustee sitting on a $620,000 balance, and he's 13 years from retirement. He thought his fund was running fine. Here's what Mark found. His first discovery. A so-called minor rule breach could cost him $19,800 personally if it falls into the most serious penalty category, BT Professional ATO. Lending to a member, borrowing, or breaking the in-house asset rules all sit in that 60-unit tier. And the SMSF cannot reimburse him a cent of it. His second discovery hit a different layer. If the fund's annual return is overdue for long enough, the ATO can add a failure to lodge penalty of up to $1,650 per overdue return. BDO Prime Financial. That's completely separate from any trustee fine, a second bill arriving for the same year of inattention. But the third discovery was the most alarming. A serious breach can escalate far beyond fines. The ATO says the fund can be made non-complying and could lose almost half of its assets in tax. ATO. For Mark's $620,000 fund, that's a catastrophe that dwarfs any administrative penalty. Add the realistic worst case for Mark, and you get $21,450 in a single breach year. $19,800 for one top-tier trustee breach, plus $1,650 for one maxed-out late return, author's estimate from ATO penalty settings. And that's before interest, tax consequences, or any repeat breach penalties. So could this be you? 3 signs. You've never checked your fund's compliance status with the ATO. You don't know whether any annual returns are overdue. And you haven't reviewed your loans, borrowing, or in-house assets lately. If any of those apply, the next 3 moves are exactly what you need. 3 moves. Let's do them. Check your status, verify your exposure, and lodge anything overdue before penalties compound. Move 1. Check your compliance status. Log into ATO Online Services for Business and open the SMSF section. Review your lodgement status and look carefully for any overdue annual returns or active compliance notices. This is general information, not personal advice, but this single check tells you whether you're already exposed. Here's how. Log in with the funds linked ATO access, open the SMSF section and review lodgement status, then note any overdue returns or compliance notices. What good looks like. No overdue returns and no active compliance issues. Move 2. Verify your trustee structure and breach exposure. Use the ATO's SMSF compliance guidance alongside your trustee records. Check for restricted actions like borrowing, lending to members, or holding in-house assets. Then match each issue against the ATO's penalty categories so you know your real risk. Here's how. Confirm whether the fund has individual or corporate trustees, check for borrowing, member loans, or in-house assets, then match each issue to the ATO's penalty categories. What good looks like. No prohibited transactions and documented trustee decisions. Move 3. Lodge any outstanding SMSF annual return through the ATO's annual return process and online services before the penalties keep compounding. Identify the oldest return first, then prepare the fund's financial statements and tax data so you can submit cleanly and stop the FTL clock. Here's how. Identify the oldest outstanding return, prepare the fund's financial statements and tax data, then lodge it and retain proof of submission. What good looks like. All returns up to date, so no failure to lodge penalties are accruing. Why now? Look at how the penalty unit has climbed. Back in 2021, SMSF penalty examples used a unit value of $222, so breach costs were lower. On the 7th of November 2024, it lifted to $330, raising SMSF administrative penalties across the board, including that 60-unit maximum. BT Professional, BDO. And right now, the ATO continues to flag fines, non-complying status, and trustee disqualification as live enforcement tools. After you act, confirm it worked. You should see no overdue returns in ATO online services. Confirm that no active compliance notices remain open. And if a breach does exist, document the rectification and keep your proof, because tidy records are your best defense. Everything here comes from the ATO, BT Professional, BDO and Prime Financial. All the links are below the video so you can verify every figure yourself. You now know how ATO SMSF penalties hit trustees personally and the 3 moves to stay clear. Next week we break down the in-house asset rule, the breach that quietly costs trustees the most. If this saved you from a $19,000 mistake, subscribe. We read the fine print so you don't have to. 1 video a week, no jargon, no spin.